Welcome to another Tax Talker, and welcome to a new year with a whole new tax law. We've already seen headlines about the biggest refunds ever. There's confusion about when is tax season going to start, and soon we will see more tax software commercials than insurance commercials during football games. There's a whole lot of noise out there. Today, I want to slow that conversation down. Let's talk about some key dates for 2026 tax season, what we know, what we don't know, some important context on those biggest refunds ever headlines, and much more. Let's get into it. Let's start with timing. And if you can take away one thing, it's that things didn't really change here. Your W-2s, your 1099 NECs for contractors, and 1099 miscellaneous, mostly used for rent. Those are all still due January 31st, but since that's a Saturday, they're due February 2nd. And by due, I mean that's due both to you and then reported to the government as well. Consolidated brokerage accounts, nothing changed. They're due March 15th to you. They usually start coming out in mid to late February. But if your income in those is substantial, as always, it's good to wait to allow time for corrections. Usually they're not big, but the brokerage firms can issue corrected 1099s, and those usually stop around the due date of March 15th. There's no change to our partnership and S-Corp tax return due dates. That's March 15th, meaning that if you're waiting on a K-1 from those should be ready by March 15th, unless the tax return was extended. As always, they can extend to September 15th, and then you're waiting. And of course, April 15th, tax filing has not changed. It falls in the middle of the week. There's no weird holiday. That is the true deadline, Wednesday, April 15th. Importantly, we do not know when electronic filing is going to open, meaning when you can start filing a 2025 income tax return and have it electronically accepted by the IRS. Over the summer, we had some drama when former Commissioner Billy Long said e-filing probably wouldn't open until around President's Day, mid-February. This was not official. I also see websites now reporting it'll be January 26th or January 28th. That is also not official. I think they're just guessing based off when it opened last year. Simply put, the IRS hasn't posted when they'll open, but we'll know pretty soon. And I'll pin that down in the comments when e-filing does open. One important area to be mindful of if you're an overtime employee, you've probably heard by now there's this big no tax on overtime. The law requires employers to report overtime wages to employees, but temporary relief was granted, so employers do not have to do that in 2025. I think many still will. Most of them have the records on what overtime was paid, but there could certainly be a scenario where you really just will need to rely on your pay stub in order to tell your tax software, your tax practitioner, how much overtime you worked. This will not be the same for tip income. That's already been on the W-2 for other reasons, and so you should have that number more easily available. Other than that, despite big law changes, we're not looking at big delays here. The electronic filing, that may take a week or two later than it normally would. But this is not like COVID, where the tax deadline gets pushed out or there's a lot of uncertainty. And what this means is you should file when the time is right for you. And that's based on your particular tax situation, not whether you're a type A person. So when is it a good time to file early? Well, the obvious one is if you're waiting for a big refund. The sooner you file, the sooner you get that refund. But less obviously, it's when your return's pretty easy. And if tax is just gibberish to you and it all seems not easy, what I mean by easy is there's not too much involved. You get a W-2 or maybe multiple W-2s, but that's pretty much it. Maybe you have W-2 and then a small side hustle with a few expenses. That's a very easy return and something you should have all the information on basically by the end of January. And there's real benefits to filing as soon as you can, outside of just getting your refund sooner. It's a huge hedge against fraud. As soon as you electronically file a tax return, no one can come pretending to be you and file using your name and social security number. Also, in a situation where there's argument over who gets to claim a dependency, a divorce situation, or maybe college student, there might be a lack of agreement over who gets to claim what. It's way easier to just file early and claim the dependent than trying to take your ex-spouse to court in order to get that changed retroactively. That said, there's plenty of times when you shouldn't be trying to file early. And by early, I mean in February. If you get a lot of different tax forms, especially brokerage statements or K-1s, you almost certainly should be waiting to March to file. That does not mean you can't start the tax return, whether with your practitioner or with the software. You can have your tax return mostly prepared with the forms available and then just waiting for the last few to come through. But again, filing is not a one-size-fits-all. You definitely need to wait until electronic filing opens to start filing, and then it's a matter of your facts and circumstances to determine when's best to file for you. Now let's move on to these headlines about refunds. We've seen a lot of them now talking about how some of the biggest refunds anticipated are coming taxpayers' way. And let's start with an important point that I've said on the channel before. A large refund typically means you gave the government more money than you should have, and now that you've filed your tax return, you've actually assessed your real tax liability, and so the government's giving you some of that money back to you. And when you see headlines about really large refunds, that's exactly what this is. The big tax law change came in July, and then the IRS came out pretty much immediately and said they're not changing the withholding tables for employers. Those big tax law changes included big tax savings, like no tax on tips, no tax on overtime, but that will not be reflected in your withholding. You're still withholding with your employer unless you manually adjusted it as if the tax law had never happened. So that is a lot of extra withholding that will come back to taxpayers in the form of a refund. So these headlines are true in the aggregate, and they do reflect an underlying reality that politicians want to get credit for, is that there was a tax cut for many specific taxpayers. And a concrete example of that is a larger refund. That's how people feel the impact. But it's important for you to remember that that's tied to specific changes in the tax code, and if those didn't apply to you, then you're probably not going to be experiencing a large refund. So if your friend's talking about their big refund, that's not because they did something clever or they know something that you don't. And the flip side matters too. If you are getting a bigger refund this year, but that does not establish the new normal. The IRS will change its withholding tables. You will notice then an increase to your net paycheck as your withholding decreases in response to whatever tip income or overtime income. But then your refund at the end of the year will go down when you file your tax return for 2026 a year from now. And that big refund, that's mainly going to apply again to people with a substantial amount of tip income or overtime income, and to a lesser extent, senior citizens who are 65 years or older by December 31st of 2025. The July tax cuts extended a lot of the 2017 Tax Cuts and Jobs Act, but a lot of that was status quo. So unless you were in those other categories, you're not going to be feeling a big change. It's just the tax cuts that were made in 2018 are still applying now in 2026. So people who shouldn't really expect much to feel different is definitely salaried employees that don't have overtime. Also for self-employed individuals, there should be no big changes there unless you had a significant asset acquisitions and are able to write off those assets. There are more opportunities for depreciation write-offs under the new tax law. As always, for higher income individuals, and I mean this here, around $150,000 single, $300,000 married, but different phase-outs apply depending on what specific part of the tax law we're talking about. For instance, the SALT cap, that doesn't phase out till $500,000 of income. That's the deduction for state and local income taxes. So there will be modest benefits up and down the income spectrum, but generally the higher income is, the less you can expect a big boon from this tax law. Headlines about big refunds, that makes for great clicks, but that really doesn't tell you much about your specific situation. And as always, a refund is not a scorecard of how you did. It is simply the difference between what you paid in versus what your actual tax liability was for the year. For tax season 2026, with any time there's big law changes, it's going to be uneven. There's going to be some people who will be thrilled with their outcome, and there's going to be other people who just had a general sense that taxes got lower, but they're not feeling a bigger refund. That's simply because they were not part of the affected taxpayer. As always, feel free to comment. Love to know what questions you have for the 2026 filing season, and be sure to like and subscribe for many more videos on 2025 taxes. Thanks for watching. We'll see you next time.